Hello, everyone. Welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time on Monday and Wednesday. And let's talk about that for just a minute. This was Bookmap's decision to reduce my stream from Monday, Wednesday, and Friday to now just Monday and Wednesday. So at the end of last year, I was streaming 5 times a week. And then this year, that was early this year, changed to 3 times a week, now 2 times a week. So again, that's Bookmap. That's their decision. Let's talk about that for a minute. So I do this because I enjoy being engaged. I enjoy helping people. I enjoy talking about this options-based way of looking at the market. Bookmap sponsors this stream because they, of course, want to encourage subscribers. And also, they want to encourage people to join Discord. So everyone, if you find value in what I'm doing, if this is interesting and helpful, I encourage everyone to join me on Discord, Bookmap Discord. It is free. You do need a Bookmap subscription. More about that in just a minute. But once you join Discord, again, you can. There's a free version of Bookmap available. You can fully participate and chat in Discord, not only in my stream and my chat, but many others as well, for stocks, futures, options, and crypto. All right, so again, take note of this. I'm encouraging everyone to join me in Bookmap Discord if you want to continue to see me stream. So you can do the math. You can see the trend from 5 days a week to 3 days a week, now 2 days a week. So again, you can see the trend, you can do the math, and if you find value in what I'm doing, if you want me to continue to do this, please join me in Bookmap Discord. All right, enough of that. Let's move on. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. That's also where I post the expected moves as well as the index relationships that I'm using and any other insights that I may have. And also, I'm glad to answer questions. So anyway, I'm also on X. My name there is at Doug Pless. And again, Bookmap is encouraging everyone to join Discord. And you do need a Bookmap subscription. There's a free subscription available. Once you subscribe, you will need to verify your account, and then again, you can fully participate in my chat, watch my stream in Bookmap, as well as many others, in Bookmap Discord as well as many others. So please join me in Bookmap Discord. Here are the key tenets to my approach to trading. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures. Certainly in the large cap tech stocks like the Magnificent Seven stocks that I follow and trade, as well as the equity index futures like the S&P 500 and the Nasdaq 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the Nasdaq 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. And the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis. And for setups, and when I talk about setups, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Hector. Welcome. Glad you're here. And hello, Stephen. Welcome. Glad you're here as well. And if you have any thoughts about my new schedule, please contact Bruce at Bookmap. Questions, comments, whatever. If you, again, if you want to comment about that, please contact Bruce. Here's my agenda for today, Wednesday, October 16th. First of all, I want to go over news items, economic data and events for today, as well as the rest of the week. Then I'll go through my positional analysis for today. Then I'll review some setups from earlier today. Then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. All right, let's get started with news items, economic data, and events. So first of all, this morning, VIX expiration was at 9:30 a.m. Eastern Time, the cash open. And then for the rest of the week, coming up tomorrow and Friday, there are some data releases. Tomorrow, 8:30 a.m. Eastern Time, jobless claims and retail sales. And then on Friday, 8:30 a.m. Eastern Time, building permits and housing starts. And then most importantly, Friday is the options expiration. This is the October monthly options expiration. Hello, Caesar. Welcome. Glad you're here. What this chart is showing is the delta notional. This is the options expiration chart for the S&P 500, Nasdaq, and Russell 2000. So the vertical axis on this chart is showing delta notional. This is market makers' delta notional, their delta exposure, delta position, and then strike price, or the expiration date, on the horizontal axis. So this is the options expiration for October, coming up this Friday. Orange bars show positive call delta notional. Blue bars are showing negative delta notional put delta notional. All right, so you can see this is a call-dominated options expiration. Positive gamma has been keeping the market in a tighter trading range, lower volatility, and what can happen after an options call-dominated options expiration, that positive gamma, positive delta notional that has been supporting the market expires, and that can lead to a little bit of consolidation, more volatility after a call-dominated options expiration. All right. Normally I would talk more about this on Friday, but I will not be here on Friday. All right, so the call-dominated expiration coming up on Friday. All right, so that's the news items. Let's move on to positional analysis now. And I'm going to start with the S&P 500. This is the ES futures of Bookmap. And before I take a closer look at this chart, I want to take a look at a higher time frame. I'm going to go to the SPX, the underlying index. This is a one-day chart, 1 year worth of data. Just to point out, this is the July VIX expiration on Wednesday, 3 days before the July options expiration. Just something that was something to keep in mind. So far today, that analogy is not playing out for October expiration. All right, some key lows here. This was the August 5th, the 51.19 low. Then the low, and let's see when that was. That was the September 6th, 5,400 put wall test. And one thing to note here is these pullbacks are getting shorter. All right, let's pick that up now with a 30-day 1-hour chart. Day 1-hour chart. I'll zoom in on this in just a minute. There's that 5,400 put wall low. Price moved up, consolidated in a range between around 56.80 and 57.65. Broke out a week ago, last Tuesday. Broke out of that range. And now has traded up to an all-time high of 58.71. All right, let me zoom in on this chart so we can take a closer look at the levels on this chart. All right, so first of all, the dashed purple lines is showing the lower and upper weekly expected move. This is based on the options market, based on the closing price for SPX from last Friday. And SPX trading in the middle of that range. The dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from yesterday. And again, I do post those expected moves in Discord every day the evening before. So SPX trading within the daily expected move range also. All right, this is kind of unusual, this very tight clustering of levels. And there are a couple of factors for that. One is options expiration approaching on Friday. That can often lead to this tightening up of the levels. Also, we'll take a look at the gamma map and trace in just a minute and see this large iron condor, 0 TTE iron condor, is having an influence on the put wall. More about that in just a minute. All right, so starting with the put wall, and it may be difficult to see here, that is in this cluster of levels at 57.90, and that was the short strike for the iron condor, the 0 DT, large, very large 0 DTE iron condor. And yesterday that short strike for the iron condor was at 58.30, and that was the put wall yesterday. All right, so the put wall did move lower from yesterday down to 57.90. Just above that at 57.95 is the volatility trigger. That is Spotgamma's proprietary volatility. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, like SPX is trading now, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. And that tends to subdue or decrease volatility. All right, so the put wall moved lower, volatility trigger moved higher, and then the next level up is the absolute gamma strike at 5,800. That's also in this cluster of levels right here. That is a strike with largest absolute positive and negative gamma. That's where most of the gamma-weighted open interest is concentrated. And then above that is the call wall at 58.50. That's a strike with largest absolute positive gamma that can be expected to act as resistance. And that level did move lower from yesterday, from 5,900 yesterday down to 58.50. So today, again, the volatility trigger moved higher, put wall and call wall moved lower, and for SPY, the volatility trigger and absolute gamma strike both moved lower. So overall, a bearish shift lower in levels for the S&P 500. Let's wrap up our view of SPX with a 1-minute chart. And I'm zoomed out. The dark shaded portions are the regular trading hours. So this dark shaded portion to the right is today, and I'm zoomed out so I can show this cluster of levels again down below. So you can see the put wall, PW, volatility trigger, VT, and L1 is the absolute gamma strike in that very tight cluster of levels. And we'll take a look at setups in just a minute, see what we'll see where the support came from. Now SPX making a very orderly trend up along that trend line. All right, so that's SPX trading above the put wall, volatility trigger, still below the call wall at 58.50, CW above, also still below the upper daily expected move, and a slow grind up in positive gamma. All right, let's go to Bookmap now. All right, in Bookmap, I have my own cloud notes. I like to show SPX levels, SPY levels, and also key ES levels all on the same chart, and I do that with my own cloud notes. You can see there are no SPX levels in play in the current price range. If there were, there is an offset, a difference in price between ES and SPX. Right today, that ES to SPX offset is 45 points. And I do post those, again, I do post those index relationships in Discord every day. All right, so you can see the key level here for SPY. That's the SPY 579 volatility trigger acting as support today. Yesterday, it was just the opposite. I did post this setup in Discord and on X. Very nice setup, a break below the at the time, it was the 584 volatility trigger for SPY, and price accelerated lower in negative gamma after that break below 584. That was in speed and high volume. Now, just the opposite today, the SPY volatility trigger held a support, and price moved higher, found resistance at the 581 level. Then finding support and now continuing on this very steady uptrend. Caesar says that's beautiful right there with the volatility trigger and thick liquidity coming in. I will take a closer look at the liquidity in just a minute. And oh boy, welcome, glad you're here. Ask, how do you get those expected daily moves on the TOS chart of SPX? Let's go back to take a look at that. All right, so this is the one-day chart. All right, I have a script in Thinkorswim. I got this from somebody else. I cannot share this. But every week, that is showing the weekly expected move. And then I draw these purple lines right on top of that. So you can't see that weekly expected move, but it's right there underneath those lines. So that's where that comes from. And then the daily expected move, I calculate that every day. What I do is go to an options chain for SPX. And you can do this for the weekly expected move as well. All right, today is the 16th of October. So at the end of the day, I will go to this expiration right here. It's tomorrow, and I'll wait to the end of the day, to the close at 4:15 p.m. Eastern Time. And then I will look at this data right here. Right now, that's showing plus or minus 31.6 points. That will be smaller tomorrow, especially if this rally continues, implied volatility continues to drop. And then I will just update these blue lines on my chart. So the purple lines remain in place for the entire week, and then I will change the blue lines. Oh boy, ask any statistics of staying inside the range of put wall, call wall, 0 DTE. I would say you can calculate that. Let me see if I have that. Well, also in Bookmap, I used to have a chart that had that calculation on that. Let's see. So wherever the levels are, whatever level you want to calculate, you can use this expected move formula. All right, let's go. Let's move back on to Bookmap now. All right, so that's Bookmap, levels in play. Again, shifts and levels. They were bearish. All right, let's move on to Nasdaq. And we'll get to setups. Back to setups in the S&P 500 and Nasdaq in just a minute, and talk about that liquidity at that level. All right, so here's Nasdaq. Sharp drop right at the cash open. NDX levels in play this morning. Always pay attention to reactions at the volatility trigger. Very important. Again, yesterday for SPY, price broke below the volatility trigger, and today it acted as support. All right, so these levels in play for NDX. And then the only Spotgamma level in play for QQQ is the 490 level. Let's take a quick look at the underlying index charts. First of all, QQQ. Really the only clear resistance was at this 491 level. That's just above the volatility trigger. So now QQQ is trading above its volatility trigger at 490. That's also the absolute gamma strike. Let's go to NDX. Note that reaction at these two levels for NDX was before the cash open. So they that is not shown, but those levels were known before the cash open. So deep pullback and then nice steady uptrend. It looks like NDX may be finding resistance right under or right around 2170. And that's also right at that previous resistance level for QQQ at 491. All right, so more about setups in just a minute. Let's wrap up our view of our positional analysis by taking a look at gamma notional. Quick look. Market makers' position on the gamma curve at the beginning of the day. This is for the S&P 500 and Nasdaq. And all these numbers did move lower from yesterday. Since the market was down, that typically gamma notional will become lower after that, after a move down, but still positive for SPX and really neutral for SPY, NDX, and QQQ. So SPX, positive gamma, whoops. All right, let's take a real-time look at gamma notional. This is the trace tool from Spotgamma. It's available to Spotgamma subscribers. And we're showing gamma in real time now. Note, real time, let me zoom out just a little bit. So this blue zone is positive gamma, showing SPX in positive gamma between 5,800 and 5,850. Then there are pockets of negative gamma. That's shown by the red. Let me zoom back in. You can see it more clearly above. Pockets of negative gamma right up here above the call wall. And that is most likely due to that iron condor that I mentioned before. Note, for those of you who are interested in this, Brent at Spotgamma, the founder of Spotgamma, has discussed this pretty extensively, both in the founder's notes and a webinar that he put on earlier today. That webinar, I believe, was for everyone. Check the Spotgamma YouTube channel for a more in-depth discussion of this. So let's, I'll cover it briefly. Let me step back in time toward the beginning of the day. You can see this iron condor right here. So this is showing market maker's position on the gamma curve, position. So market maker's position, gamma, was blue bar showing positive. Oops. Blue bar is positive. Red bar is negative. So this is the opposite of the trader's position. So this is an iron condor. Traders are short the $58.45, $58.50 call spread and short the $57.90, $57.85 put spread. So they want price to remain in between the short strikes. On the other hand, market makers do have some incentive for price to trade through one of those sides. So the Captain Condor, that's what Spotgamma calls that, the fund putting on this trade, they are short this call spread, short this push spread. Again, they want price to stay in between. That means market makers are long these spreads, so they want price to move through so they can make full profit on the put spread like yesterday. That's what happened yesterday. Price moved through that put spread. Market makers made full profit. And today it looks like price could potentially move through the long, the call spread. Again, market makers are long those spreads. So they do have incentive for price to move through one of those levels. So remember, at the beginning of the day here at 9:30, plenty of positive gamma, SPX in positive gamma, the blue zone, with areas of negative gamma associated with this iron condor here and here. All right, so let's see how that is played out during the day. So as prices moved up, and Hector asked, wouldn't they be hedged with futures so they could be flat on that? You would think so, but Brent at Spotgamma has talked about dealers may have some incentive, market makers may have some incentive for price to move through there, and they can adjust the price of options based on that. So I'll refer you to Brent. Spotgamma subscribers can read more about it in the founder's notes. And then everyone, I believe that YouTube discussion was available to everyone on Spotgamma YouTube. All right, so let's take a look at gamma now. Notice traders have taken profits on the put spread. That has been closed. This is still open. So that's the current gamma position. All right, so my thesis for the day was looking for a little bit of higher volatility based on the drop down in gamma notional, and also slightly bearish. Now I forgot to mention for the Nasdaq, NDX volatility trigger moved higher, and call wall and absolute gamma strike moved lower. And for QQQ, the volatility trigger and absolute gamma strike both shifted lower. So that's not playing out today. Options traders have had something different in mind. And then again, looking for a little bit higher volatility based on the shift lower in gamma notional, but now looking at this, gamma notional is now pretty firmly positive. All right, so let's take a look at some setups now. I'm going to start with the S&P 500. And I'm going to take a look and see what options traders have been doing today. This is the hero signal, hedging impact real-time options, available to Spotgamma subscribers. This is the index signal for the S&P 500, showing options trades and market maker hedging activity for SPX, SPY, XSP, and ES futures. There are two lines on this chart. The white line is price for SPX, and the purple line is the hero signal. A falling hero signal indicates traders are taking negative delta options positions. That means they are buying puts and or selling calls. And a rising hero signal indicates they are taking positive delta positions. They are buying calls and or selling puts. So that's the index signal. There's another signal that we can take a look at for the S&P 500. This is the equity signal, showing options trades, market maker hedging activity for a combined signal of all 500 stocks in the S&P 500 index. All right, so let's start with the index signal. Actually, I'm going to go to puts and calls. I'm going to have to jump, go back to the index signal, go to full screen. All right, so what this chart is showing is over about the first half hour, traders were selling calls. That's shown by the falling orange line, buying puts. They pretty quickly took their foot off the gas. Price consolidated again at the SPY 479 volatility trigger, acted as support, and then traders started buying calls, selling puts. Price moved up until about 10:30. Call peak here. This is a very reliable pattern indicating a potential top in price. It's a bearish signal, that sharp call peak. Also a flow alert comes in, signals, get your attention, signals a potential shift in the hedging flow from, in this case, from positive to negative. And then that's exactly what happened. Price moved lower. Traders already started buying puts, and just a few minutes later started selling calls. And then again, the hedging flow shifted neutral or slightly positive. All right, so that is the index signal. Let's take a look at the equity signal. And you can see pretty similar. Blue line, orange line moving down until about 10 o'clock. Then they start selling puts, buying calls. Price moves higher. And in the case of the equity signal, they continue to buy calls. So just a brief pullback, and traders continue to buy calls. Put line pretty flat today. So that notional value for right now is 45.7 million positive. So they are selling puts today, but the call buyer is definitely in charge today. 811 million positive delta notional value. All right, let's go take a look at Bookmap. Back to the S&P 500. All right, so again, here's this reversal at the 579 volatility trigger. These volatility triggers, again, it's very important to watch how price reacts at those levels. Let's take a look. Now, in this standard view of ES, I have the heat map toned down because of this algo, this cloud of dust up above and below price just really obscures price for me. So I have the heat map toned down a bit, but there's an add-on that's available to Spotgamma Bookmap subscribers. Sorry about that. And it eliminates a lot of that noise, that algo noise. This is the Trader Map Lite. I believe it is free and available to all Bookmap subscribers. And I have that heat map turned up quite a bit. You can see the heat map here showing a history of the limit orders in the order book. And these are limit buy orders, shown right at that level, right at the 579 volatility trigger. Looks like some were filled. And then aggressive buyers started to come in. You can see the sharp increase in cumulative volume delta there. Buyers are exhausted. Aggressive sellers come in as, remember, that flow alert and the call peak in the index signal. Price moves lower. Finds support. And then starts to grind higher again in a positive gamma environment. So very helpful here, this Trader Map Lite, very easy to set up and implement. And you can see the liquidity much more clearly in this by eliminating a lot of that noise from the algo. Oh boy says SPX has a flow alert at around 14, I guess that's 2 p.m. reversal coming. Yeah, we'll take a look at that in just a minute. And Life to Live, can you share some, welcome, ask, can you share some insight on the Apple Bookmap? Yeah, we'll take a look at Apple. That's the first stock that I want to take a look at today. So I am going a little bit slow. All right, so that's the setup in the S&P 500. Key was the support at the 579 volatility trigger. And let's go back to Hero. We can see the shift in hedging flow. Let's take a look at one last thing. Go back here. All right, so we know that reversal was right around 10 a.m. Let's go back to the trace map. Now let's take a look at delta pressure. And I'm going to zoom in on this a bit and go back to 10 a.m. here. So you can see what this chart is showing is this is the hero signal, and then this blue zone, this is market maker buying support. This blue zone, again, buying support, and the red zone above is selling pressure. Selling pressure in red zone above and buying support. So you can see as SPX falls toward that level that you expect may act as support, all that liquidity at that level. And again, this is like a heat map for options. So I'm seeing hero signal with a heat map, price heading down toward that level. Again, I expect it to act as support, and that's exactly what happened. Hero signal shifts higher. This is the S&P equity signal. S&P 500 moves up into the red zone, selling pressure. Price reverses lower. Step through this a little bit more. Price moved back down to the blue zone. Note also that's the last closing price for SPX. And note how the buying support follows price up and the selling pressure recedes. And now the SPX is approaching this negative gamma zone. Right around 58.50. All right, let's take a look at Nasdaq now. And man, I'm running really slow. Sorry about that. Take a look at Nasdaq. All right, Nasdaq, sharp move lower. Again, resistance before the cash opened at these NDX levels. Now finding a resistance at the 491 level still. All right, let's take a look at Hero. Note that trace tool is only available for SPX right now. We'll take a look at Nasdaq. This is the signal, combined signal, index signal for the Nasdaq, showing options trades, market maker hedging activity for NDX and QQQ. Note in the morning, traders were buying puts, selling calls. Price move lower, sharp drop lower. And then right around 10 a.m., that reversed. They started selling puts, buying calls. Price moves higher. All right, let's take a look at the other signal that we can take a look at for Nasdaq. This is the Mag 7 signal. This is options trades market maker hedging activity for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. Pretty similar pattern here. So the index signal and the Mag 7 signal for Nasdaq, both pretty much in sync today, as well as for the S&P 500. The S&P 500 index and equity signal, both in sync as well. Traders selling calls, buying puts, and that reverses 10 a.m. So let's go back to Nasdaq. Let's take a look at order flow here in Nasdaq. Let me zoom in on this just a little bit. All right, so taking a look at order flow, you can see, first of all, the volume dots. Volume dots indicate market buy minus sell. Magenta dots indicate more sellers than buyers. Price makes lower highs. Right at the cash open, breaks down below 491. Aggressive sellers, you can see all the magenta volume dots. Falling cumulative volume delta. Also, sell stop orders help to fuel the move lower. This light blue line is showing iceberg orders. These are orders that large traders use to hide their size. As price was falling, note large traders were fading this move. This is pretty typical. They were buying NQ futures as price was moving down, shown by the rising light blue line. This gap widens out, and cumulative volume delta flattens out. Sell stops flatten out. Aggressive buyers start to come in. And again, large traders start fading the move with iceberg orders. And price moves up again to that 491 resistance level. Caesar says, while this is textbook, between Spotgamma and Bookmap, it paints a perfect picture. I agree. It takes some time you just have to slow down, recognize everything that's going on. Hello, Vihan. Welcome. Glad you're here. All right, so if you take the time, think about it. The clues are definitely there in Bookmap and in with Spotgamma tools. And Art asks, how can I see the icebergs in my Bookmap? Well, you have to, first of all, subscribe to Rhythmic Data or Bookmap Data for CME futures. And then you just need to subscribe to the MBO bundle. And that's available in the Bookmap marketplace to get the icebergs. So icebergs and stops are not available in DXFeed. Rhythmic is the only data provider that provides that. I think, I'm not sure where Bookmap data gets their data, but for a long time, Rhythmic was the only data provider that provided that information. CME has been providing that for several years. All right, so that's the Nasdaq. And let's take a quick look at some stocks. First of all, here's Apple. So here you go, Life to Live. Here's Apple. Let's see what options traders are doing in Apple. Note options traders were buying puts, selling calls up until about 10 a.m. When traders buy puts and calls, buy puts, sell calls, market makers take the opposite side of those trades. In this case, they have to sell stock to hedge their delta exposure. 230 key gamma strike. Apple finds support at that level, and then traders start buying calls, selling puts, and that they pretty quickly took their foot off the gas, and now price consolidating but above the 230 key gamma strike. Let's go back to Bookmap. So you can see sharp drop in Apple began just before the cash open right there at 9:30. This is very typical of stocks. These limit orders come into the order book right at the cash open. These are limit buy orders. Right at the 230 key gamma strike. Looks like they were consumed. Sellers are exhausted. And then price consolidating as, again, traders bought calls, sold puts for a few minutes, took their foot off the gas, and now price consolidating just up and down around VWAP, but above the 230 key gamma strike. Looks like the limit buy orders came in. So there's about 40,000 orders in the order book. That's what's shown in the history of the limit orders in the order book here in the heat map. All right, next stock I want to take a look at is AMD. More key levels in play. And for AMD, 157.50 is the hedge wall. And I just drew that in with this white dashed line here. We'll see on the hero signal. That is the 157.50 hedge wall, acting as resistance multiple times today. Then AMD did find support at this little level of high liquidity, just like Apple. Limit buy orders in the order book at 155. Most of them came in at the cash open and were consumed. All right, let's see what options traders are doing in an AMD. And I want to focus on this setup right here, just before 10:30. Traders were selling puts, and the call line was pretty choppy. Flow alert comes in right around 10:25, and this is a call peak pattern. There were multiple call peaks. Flow alert here, get your attention though. That's when the hedging flow shifted to definitely negative. Traders started selling calls, buying puts. Price moves lower, right down to that 155 level. That was the reversal at the 157.50 hedge wall, right around 10:30. And as price moved down to that 155 high liquidity level, again, traders started selling puts, buying calls. Price moved higher. Let's go back to Bookmap. There's that reversal lower at 10:30, right at the hedge wall. Aggressive sellers start to come in. Price moves lower, finds support again at the 155 level, and hedging flow shifts bullish. Price moves higher. Life to Live asks, what indicator do you have on below the map? All right, so for stocks, I have two indicators. First of all, this is cumulative volume delta. I have that on futures and stocks. This is the market pulse price change indicator. There are a number of algorithms available for the market pulse indicator. I like price change. And we'll take a look at, I use this for entry points for a trending stock. Let's go back to Apple. No, Apple would not qualify. So I'll more about that in just a minute. All right, Vihan asks how to use the flow indicator in Spotgamma effectively, and also the OI data analysis in Spotgamma. I don't think I'm going to have a time to look at the open interest data analysis. And I've been talking about how I use if you're talking about the hedging flow, the hero signal, I've been talking about that for quite a while now, and I talk about that at every webinar. So if you missed some of that, just go back and watch the replay for today. Oh boy says SPX looks like it's going to the call wall. I'm not surprised at all. Let's take a look at quick look at some other stocks, then we'll get back to the S&P 500. All right, I forgot to turn on the market pulse price change indicator for Microsoft. Let's see what options traders are doing. Let's go to Microsoft. Just like other stocks we've looked at, traders were selling calls, buying puts, and price reversed higher about 411, between 410, 411, 410 is the put wall. Traders started selling puts. They were buying calls. And now they're again selling calls. So net for the day, they are selling calls and selling puts. Back to Bookmap. Let's take a look at NVIDIA. Very bullish day in NVIDIA after a brief pullback yesterday. All right, so this market pulse price change indicator does work very well for NVIDIA. What I use it to do is I look for extremes in an uptrend. Look there, typically these low points, the bright red, you can look at for an indication of a deeper pullback, for a pullback entry for long. So you can see here this market pulse price change indicator, the bright red, and as NVIDIA pulls back to VWAP, also the 133 level, price moves higher. In this case, there are actually more of these. But often this market pulse price change indicator works very well for NVIDIA. Let's see what options traders are doing today. Go to NVIDIA. And call buyers definitely driving price higher in NVIDIA, shown by the rising orange line. When traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. And the put line is basically flat today. So call buyers definitely driving price higher in NVIDIA today. You can see also rising cumulative volume delta. A lot of aggressive buyers come in, and they start right around 10 a.m. Aggressive buyers come in. Price grinding higher. All right, let's take a look at S&P 500. Oh boy says SPX is heading up potentially to the call wall, like oh boy says. All right, so let's take a look at, we'll go to Hero and also Trace. Actually, first, let's take a look at the daily chart for SPX. So SPX, this is the 1 day, 1 minute chart. We can zoom in on this now. Very, very steady mechanical uptrend. All right, so now it looks like SPX is broken above this channel. And as old boy says, heading toward the 5850 call wall, right at the upper daily expected move. All right, let's see what options traders are doing. And you can see the breakout here. Whoops. Breakout. Buy stop orders, helping to fuel that move higher. Again, let's see what options traders are doing. Go back to the index signal. Hector asked, do you know if market pulse used on stocks work well on Bitcoin? Sorry, I don't know. I don't trade Bitcoin or look at Bitcoin. All right, so it looks like, let's zoom in on this, on the index signal. Right around, let's say 145, call buyers started to come in. Flow alert, in this case, there was no mean reversion. It did signal significant options activity, but it was more moving higher. Right around, again, 145, traders started more aggressively buying calls, selling puts, large block orders, call buyers coming in, and continues up toward the 5850 call wall. Let's take a look at trace. Delta pressure. Let's zoom out just a little bit. This is interesting. Now this buying pressure is just following price up. And I don't see any selling pressure up above. And note this. This short call spread, this is the Captain Condor short call spread, market makers along this call spread, and they do have incentive. They will make full profit on this if price moves above this 5850 level, the call wall that price is approaching. Note there is some negative. Let's take a look at gamma. Some negative gamma just above, right there. Let's take a look at charm. All right, so very likely pinning level, maybe at 58.45. So that is showing this charm looking for potential pinning right there, 58.45. So very important level here, right around this Captain Condor short call spread, market maker long call spread. Live to life, I'm probably not going to have time to answer that. If you're on Discord, you could post that and I would answer it later on. I'm already over time. And IcoJad asked, can you explain TraderMap Lite advantage? Yeah, let's go take a look at that. Then I'm gonna have to wrap it up. So this is the regular ES futures. This algorithm has been in here for quite a while, many months, I think, with limit orders above and below price. It really obscures the view of SPX. and the more important liquidity levels. So Trader Map Lite eliminates most of that algorithmic activity, and so you can focus on the key levels of liquidity. All right, everyone, again, I want to mention what I discussed at the beginning. My schedule has changed. Now I'm streaming only twice a week, Monday and Wednesday. That was Bookmap's decision. And if you want me to continue to stream, so this trend has been moving down from 5 to 3 to 2. You can do the math. You can see the trend. If you want me to continue to stream, if you find value in this, if you like what I'm doing, please join me in Bookmap Discord. It is free. You do need to subscribe to Bookmap to fully participate in chat, watch the streams, but you can subscribe to the free version of Bookmap, verify that, and then join me in Discord and take full advantage of Bookmap Discord, not only my stream, my chat, but many others as well. All right, everyone, have a great afternoon. Remember, options expiration on Friday, and I will see you next Monday. So have a great rest of your week and weekend, and I will see you on Monday. Bye.